Have you wondered why many people work hard in their job, save their money in the bank and let it just idle, and do not think of ways to make their money work harder for them? So today I want to visit a topic about whether are most Singaporeans invested in stocks. And I did the research, and this is the most recent article I can find, which states that 1 in 3 Singaporeans do not invest. As you know, the bank interest rate for your saving doesn't need my further elaboration here. And if you look at this chart on Singapore dollars money supply, you can see that the money supply increase every year, which means there's some form of money printing going on every year. And if you look at this chart on inflation, you can see that year on year inflation grow about 2% every year. So the key question is, if you don't store your hard-earned money in an asset class with a good store of value that can beat inflation, then you will find your hard-earned money losing its purchasing power in the future. Your $1,000, if you let it do nothing, will be worth only $820 in 10 years' time, assuming 2% year-on-year inflation increment. Can you still remember how much your bak chor mee cost you 10 years ago? So the question will be, why some people aren't investing? If you look at this article, one of the reasons stated was that people think investing is a form of gambling. This is true if you are uneducated about investing. It's like saying the sea is super dangerous if you don't know how to swim. But if you know how to swim, the risks are still there, but you know where and when to swim to mitigate the risk. This applies to investing in the stock market as well. Other reasons can also be due to lack of time or awareness on investing too. So let's take a look at some of the benefits of investing in the stock market. Firstly, investing will help you beat inflation, as you can see that returns in stock market exceeded the pace of inflation. Secondly, it will also provide you with the capital gains when the stock rises in value compared to when you first bought it. And also the annual dividends that the stock generate can also serve as a source of passive income for yourself. And of course, with investing also comes with some risk. Market can be volatile in the short term and you can suffer paper loss during this period, or the company you invested in didn't perform well or went bankrupt. At the macroeconomic level, if the global economy is not doing well, it may also affect the stock market in the short term. So if you are based in Singapore and looking to invest and not too sure where to start, I can share my experience in both the Singapore and US stock market where I'm invested in. I hold a few Singapore stocks, and the primary purpose is to enjoy the dividends to generate some form of additional passive income flow. So how usually I shortlist my Singapore stocks is that I come to this website, dividends.sg, where it will rank all the dividends payout over the years for the blue chips and the REITs. And usually I will look at the stocks that will generate at least 2% dividends every year. And you also need to look at the industry that you think will do well in the near future. So let's say I shortlisted the banking and the real estate sector that which I think will recover and do well in the near term. And here you have DBS, which is the banking sector, and CapitaLand, which is in the real estate. So you can see both DBS and CapitaLand give you at least 2% dividend payout every year. But remember, in Singapore stock market, the minimum amount of shares you must buy is 100 shares. And if you don't have so much budget, you can go for the lower cost CapitaLand to get at least 2% dividend payout. But if you really need the 2.8% dividend payout that is generated by DBS, you can try looking for other cheaper stocks compared to DBS. One thing about trading in the Singapore stock market is that growth has stagnated over the last 10 years. And the reason is because most of the company listed in the Singapore stock market only has exposure to either domestic or at most regional market. So their growth can be limited unless the company can penetrate into new growth area. If you compare this with the S&P 500, which is one of the indexes tracking the US 500 largest stocks, you can see that the average annual return are about 10 to 20%. So if you are not familiar with the US stock market, you can start off by trading the blue chips like the FANG, Microsoft, which can still give you a pretty good returns every year. And for those who are looking to 10x or 20x your money, you can also research on those growth stocks that you think have the potential to disrupt industry in the future. So US stocks can be very expensive, but the good thing about US stock market is that the minimum amount of shares you can buy is 1. So I usually invest in the US stocks and hold them long term for the capital gain. So both trading and investing are both different methods of attempting to profit from the financial market. Trading involves more frequent buying and selling of stocks, while investing involves buying and holding and accumulating the stocks over a long-term period. So personally, I'm 70% of an investor who buy and accumulate stocks and 30% trader who also take advantage of the market condition to make some profits over a short-term period. So there are many brokerages that you can use to invest in Singapore stocks. Personally, I'm using Poems. And for US stocks, I'm using TD Ameritrade or Thinkorswim. Please do take note of the commission charges or fees that the brokerage may charge for each transactions. And you also want to ensure that the brokerage is well established, regulated and profitable before you trust them to put your money in. That's all for this video. Appreciate if you can click on the like button of this video and subscribe to my channel if you haven't. Thank you for watching and have a fun and safe time investing. See you again in my next video.